I exposed my CEO's $50 million accounting fraud. They fired me, so I sued under SOX and won $3.5 million. I was the chief financial analyst for a publicly traded software company, Vision Corp. One quarter, my team spotted a $50 million hole in our books. Our CEO was cooking the books to inflate stock prices. When I reported it, the board didn't thank me. They fired me for insubordination. They thought I would quietly disappear, but I sued them under the Sarbanes-Oxley Act and won a $3.5 million settlement, ending their entire fraud operation. My job was to maintain the company's financial integrity. In late 2021, while reviewing the Q3 revenue, I noticed massive discrepancies. $50 million in future contracts were recorded as current revenue. This is known as channel stuffing or premature revenue recognition, a blatant securities fraud designed to mislead the SEC and investors. I prepared a detailed internal memo for the CFO outlining the fraud and citing the specific gap, generally accepted accounting principles, violations. I stressed that we were legally obligated to correct the filing immediately. The CFO took the memo straight to the CEO. 2 days later, I was called into the CEO's office. He didn't deny the fraud. Instead, he told me that reporting it externally would harm shareholder value. He demanded I retract the memo and falsely certify the quarterly filing. When I refused, citing my legal and ethical duties, he exploded. He accused me of being a disloyal team player and ordered HR to terminate me immediately for insubordination and creating internal hostility. They even tried to withhold my final paycheck and unused vacation time. I was now a whistleblower, unemployed, and facing a corporate behemoth that was actively committing fraud. Most people are terrified to fight back against a CEO, but I had the receipts. I hired an employment lawyer specializing in SEC whistleblower protection. My entire case rested on the Sarbanes-Oxley Act, specifically Section 806, which protects employees of publicly traded companies who report fraud from retaliation. We didn't sue the CEO personally at first. We sued the board of directors and Vision Corp for illegal retaliatory termination. We used the CEO's own email demanding I retract the memo as the smoking gun. It proved their firing was directly linked to my protected whistleblowing activity. The company tried to argue that I was fired for attitude issues, but my lawyer pointed out my attitude issues only began after I exposed $50 million in fraud. The timeline of the termination was indefensible. The SEC started an informal inquiry based on our lawsuit filing. The company's stock price wobbled. The board realized that if this went to a public jury, the resulting verdict could be tens of millions in punitive damages, not to mention the criminal charges for the CEO. They begged to settle out of court immediately. They settled for $3.5 million in total damages, covering lost wages, emotional distress, and significant punitive compensation. The settlement also required the CEO to resign and the company to issue a corrective filing to the SEC, finally proving that I was telling the truth. The lesson? When you expose corporate fraud, you are not just fighting the CEO, you're protected by federal law. The Sarbanes-Oxley Act, or SOX, is the ultimate shield for financial whistleblowers in publicly traded companies. If they fire you within a few months of you reporting a violation, the law assumes retaliation. Never compromise your ethics for a paycheck. The law can make the corporation pay far more for trying to silence you.